Hello, everybody. Welcome to Thursday. The S&P 500 was up a little bit more than 0.8% today. Really, no show this week, so I want to do a little summary for the week that happened. It's going to be a short week altogether. And so today we had a really surprise job report. Supposed to have about 117,000 new jobs that came out last month. It was 147,000 new jobs. You do have to kind of take these with a grain of salt. If you look at April and May, they revised those both up to higher, which was good. But then for March, it was 258 or something like that. That was knocked down to 108. So last year there was so much revision that I don't know why they bother, to be honest. So it's kind of interesting. However, certainly, the jobs market looks good, at least in that report. Earlier in the week, though, we had the ADP report, which is a private payrolls report, and that was actually down 33,000 jobs. They were expecting it to be up. So you look at that private sector, job market's actually shrinking. You look at the other portion here, because one of the biggest drivers of the other report that came out today was the government hiring, specifically state and local government hiring, as well as healthcare and education and such too. But so you can kind of tell what's going on, and we'll see what happens. But the bond market, fell a little bit today based on this also. And got to really watch the bond market now, because the big beautiful bill passed the House today after the market closed. But the bond market's going to be the one that's going to be voting on that bill and what's going to happen, and whether that deficit creation is going to be acceptable to the bond market or not. So, when it falls, you can think, okay, is there some issue happening? But the reason it fell was because the job report was so good. It meant that the Federal Reserve is very, very unlikely this month to do any rate cuts. It was only a 25% cut chance that the market was looking at, in the futures market. That dropped to zero today after the rate cuts. And so, that the bonds, of course, go up in value and rates go down. And so if there was some expectation that there was going to be a rate cut in, July, even though it was small, the bond market had already factored that in. And then when it went to zero, the bond market readjusts and such too. So still thinking that they're going to be a rate cut. The market's betting on rate cuts in September. So, we'll see what happens there as far as that goes. But so it's, altogether, the stock market continues to do quite well, continues to move up and what have you. Of course, we don't have the impacts coming at us for the, tariffs or potential deportation impacts and those types of things. So we're kind of in this golden land right now where we've got this big tax cut bill, which whether you like the tax cut bill or not, it's something the stock market is going to like. It just means more money is coming in to the economy instead of going into taxes in theory. So, but secondly, if you look at deregulations that have been happening, so those are good. And then the tariffs themselves caused all of this purchasing to happen. And so we've got, hiring happen. We have relatively low inflation because those price increases have come through. We saw a little bit of a jump yesterday when they announced that the Vietnam tariffs have been negotiated, at least on a framework basis, at 20%. They were at 2% after the pause. I'm sorry, 10% after the pause. And so that is one of my concerns. The average tariff is quite high, higher than it was in 1930. And it seems like as we go through these other tariff negotiations, it's actually going to go higher because most of the tariffs right now are at 10% with most of the countries. And so, I'm not going to be surprised if it isn't higher. And then we'll have to see, what is the impact? What happens with that? And how does that work? And one of the things that they had concerns with about Vietnam is that the tariffs that were placed, back in 2018 on China, one of the ways they got around that was by passing that product through Vietnam first because they didn't have a tariff. And so they said that if you do a pass through, it's actually going to be 40% instead of 20%. And if you look at China, they're at 30%. So it won't make any sense for China to be passing through, theoretically, Vietnam as far as that goes. So they were trying to plug that hole. We'll see where other holes pop up. And that is one of the big things about these tariffs. And again, we don't really know how they're going to work or what they're really going to be on a level basis because we don't know how companies are going to find workarounds and different things like that. Obviously, some stuff could be made here in the U.S., but that probably doesn't happen in the very short term. And we'll have to see how this impact happens, whether or not Trump continues to keep these tariffs at these levels or probably higher levels by the time we get there. If there's trouble, does Trump back off, right? What is the impact of the deportations? Those types of things. So these are things we're still kind of waiting for. I'm going to have to wait through all of this. But in the interim here, I think the market could actually do quite well. July is, the best, especially the first half of July is the best, first half of any month, in or half of any month for that matter, on an annualized basis. So this is a good thing. We're starting to see some, and of course, this week is a little bit thinner traded because of the holidays and such too. So if it's already going up, it tends to kind of go and keep going. So anyway, look forward to being able to see what's going to happen next week. We'll start up the daily videos again next Monday. Talk to you then. Thank you.